Morning, everybody. It's the 23rd of February. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning, mate. All right?
Hey, yeah, how you doing?
Yeah, not bad, thank you.
Good, good, good. No technological issues so far today for me
Oh, that's
after
good, mate.
yesterday's collapse.
I know. We thought
Sorry
you'd
about
keeled
that.
over. I was actually thinking, Joe, it looked like you'd just keeled over online and died.
Yeah,
You weren't moving, and I thought, is this a great marketing tactic? We could just
could have
like
gone viral, couldn't
basically,
it? Man
yeah, it could have
dies
gone
on live
viral. Yeah,
stream.
yeah, and then so we would have got a lot more maybe viewers, people
Yeah,
coming to the website to sort of like watch every day, just in case. Then sort of like also taking bets on when I could go.
yeah, yeah.
So yeah, it was. There was a few things that went through my mind. Weirdly enough,
Okay, well, there's a few good ideas there for various
yeah,
stunts that
for
we
the
could
PR
try.
team.
Yeah, let's write those down. Put a Google Doc together.
Excellent. I will do that.
Okay, cool. Right, so let's get stuck in. So markets on the front foot this morning. Developments closely. Western countries announced financial sanctions against Russia with the threat of more action if Russia escalates the situation. The German government also announced that it would not sanction operation of the Nord Stream 2 gas pipeline, which put upward pressure on gas prices, just what we need. Overall, there was a relatively measured stance with hopes that a full-scale invasion of Ukraine could be avoided. There were some talks this morning, from what I heard, that Vladimir Putin is willing to discuss the situation, which I guess is putting the markets on the front foot today.
Mm.
Risk appetite initially remained under pressure yesterday. There was further demand for defensive assets. Performance was still pretty mixed overall, particularly on the US equity side of things, but they did rally from intraday lows that we posted. There was a rebound in the services sector yesterday. According to the flash February data, the US PMI manufacturing index strengthened to 57.5 from 55.5 in the previous month, which is much stronger than expected for the services data and underpinned the continued confidence in the US outlook. In terms of what's going on with the Bank of England, the Deputy Governor Ramsden stated that further moderate increases in interest rates were likely over the next few months. He did, however, emphasise that rates were not likely to rise sharply to levels of 5% or higher. There was quite a bit of volatility in sterling yesterday as a result of those comments. So that's pretty much it on the news side of things. So we can now jump into some charts. Steve, what's taking your eye this morning?
Um, well, there's not a lot going on, mate. Oh, I just deleted my gold from my charts. Let me just bring it up again.
Do you want to start with commodities?
Yeah, sure. Unless you want me to start with something else.
Well, I can start with FX if you want.
Yeah, go with FX, and I'll just have a little browse through to see what where the interesting ones are.
Okay, well, it was. I mean, we didn't really go anywhere, but there was quite some large ranges in FX yesterday. So this is the dollar index. As you can see, that pushed higher to the upside, topping out around about 96.25 from lows that we saw around about 95.48, but pretty much closed where it opened. So nothing really going on there. Still trading with it within this bullish channel, so still expecting to see higher prices. If we take a look at Euro US dollar, that closed higher yesterday, but well off of its best levels of the day. Highs of around about 113.90. Sorry, that was the day before, 113.65, down to lows of 112.90 on the front foot today. So overall, still looks as though we're going to remain probably quite range bound as things stand. It was a pretty choppy session for sterling off the back of those Bank of England comments. We did close lower yesterday, but well off of the worst levels of the session. Euro sterling was quite interesting. A really large range, had a really big push to the upside, but that was faded into by the short sellers, and they dragged that all the way lower. Still closed higher on the session, but certainly well off of its best levels. Overall, still remains very much under pressure, and I think we're still seeing evidence of traders wanting to sell into rallies. On the front foot today, as you can see on my watch list, we've got some of these New Zealand dollar currencies which are really going for it at the moment off the back of their interest rates yesterday. I'm not sure what the outcome was, but clearly bullish for New Zealand dollar as it stands. This is New Zealand dollar versus the Swiss franc. So from what has been trading in, a pretty long and well-established downtrend, we are maybe in the process of forming some sort of bottom here on the New Zealand dollar. Typically associated with risk taking if this starts to go higher. Got some resistance up here at 62.76 target on that. If we take a look at New Zealand dollar, Japanese yen, as you can see, that is very much on the front foot today. Really strong green candle posting on that at the moment, and looks like it is set to continue. New Zealand dollar versus the US dollar, really strong rebound from these lows, the lower end of this bearish channel. We've got some resistance up here at 68.60 to potentially target. We've got some fib levels as well that may do a job. I may need to redraw this actually. Yeah, so actually, interestingly enough, from these highs up here in October down to these lows that we posted at the end of January, we're now smack bang into a 38.2% fib level of that entire move. So that may cap some of the upside today, but it is looking very strong at the minute. So you might want to be careful if you're trying to stand in front of that as things stand at the moment. Is it a similar situation with Aussie? Looks to be bouncing off of these lows, potential for a double bottom to form here. Needs to get above 73.14, and if it does, then arguably we have completed a double bottom pattern and we can start looking for higher prices and maybe take out this long-term downtrend that's plagued the price since February 2021. So some interesting things playing out in some of the riskier currencies at the minute. Potential for some of them to actually bottom out, and for a large reversal to take shape, but it needs to do a little bit more before we can get too excited about that for now. So a few interesting things to watch on the FX space at the moment.
Nice one, Joe.
What do you got, Steve?
I've got not a lot. Well, commodities, obviously, after we've had this slight bit of a reprieve, should we say, from the Russia-Ukraine situation, we've seen oil and gold both move aggressively lower. We had this situation where the oil gapped up, or crude oil gapped up. We can see it on this hourly chart. Let me make it a little bit larger for you. Gapped up overnight and traded up to 94.60 on the WTI crude oil, and we can see that over the course of the day prices moved back lower and again have moved lower overnight after finding a little bit of resistance at $92 the figure. 90.75 is where we have support now, and then we move into this this initial breakaway which we had all the way back on the 21st, all that time ago, where we saw another gap up open overnight. So really the real the support we see coming in is anywhere between 89 and $87.50 on the WTI crude oil. Looks like we're heading back down there. Really need to see a clear break. $93 is the level to watch in Brent crude oil. We can see the similar sort of price action. Support now found around $93. A break of there should open up again another return to the downside. That was a good idea all the way back there. Support coming in here at 89.35 up to 91, the figure really. So yeah, it looks like we've topped out really on crude oil. The daily chart showing a shooting star candle just here, and on crude oil not so much of a shooting star candle. The body, if the body was a bit smaller, it would look like a shooting star, but a hanging man candle the day before. So that's quite an interesting one, and it looks like we're aiming for this end of the fifth and final wave really before we get a correction. Momentum is on the downside, so it looks potential as long as it doesn't sort of tension doesn't escalate. Russia Ukraine could get a really nice technical correction from here. Gold has moved higher, obviously, and we've got up to, show the weekly chart, it shows this more clearly. We got up to resistance we saw last back in May of last year, and we stored just in front of that, $1,916. We see this as a really key level. We'll call it a neckline. If we break above this level and close above here on a weekly basis, then a double bottom is has been confirmed, and the potential for the move, the measured move target, is around about 2,150. However, the weekly candle seems to have rejected this resistance quite clearly and is also forming a shooting star candle, which is a negative chart candle formation. On the daily chart, we can see the rejection here, and we're off to a negative start today. Support really for me comes in at around about 1885, and then we'll get further support down at 1875, and that band of support really needs to hold prices higher. If we manage to get a break and a close below this on a daily basis, then I can see this correcting, having a much deeper correction along the lines of, let me take you back to the weekly chart. Get a rejection back here, we could be then looking to target this upward trending support, which comes in this week at around about $1,800. Yeah, around about that level. 1800 has been a really key pivotal level in the past as well. So obviously the main target down the downside, support coming in at 1675 to 1680, which is I still feel we have there is room to retest that. On cryptocurrency, just taking a quick look at Bitcoin, price action still on the defensive, although we've had a rally up from the lows. In fact, we found support at previous support levels going back to early February. That came in at 36,387, and we've seen a really nice turnaround, inverted hammer here, and then a nice solid couple of days of price action. Resistance should come in around about the 39,500 level, so about 900, 800, 900 points higher than this. If we get a close above there on a daily basis, then it may be, you know, look for a retest of the downward trending resistance, which maybe we could see on a weekly chart. That comes in around about 42,300. So potential for a little bit of an uplift at the moment. It's a little bit more positive, and I think indices will drag cryptos higher. Here we go. On the indice front, we can see a nice turnaround on the daily chart. The sell-off stalled 7,360, around about this confluence area of action going back to January, and projected higher this morning, looking quite strong on the FTSE side of things. Further upside expected, although we have posted these lower highs, so really needs to clear 7,570, so that's another 30 points, clear and close above there, and it will take out these highs, and the lower high scenario will have disappeared, so a lot more positive potential for the FTSE. On the DAX side of things, again, a nice turnaround yesterday. Stalled at 14,313 and rallied nicely higher, 500 points higher from yesterday's lows. So looking very positive, but we are hitting the real previous support now turned into resistance levels. So be aware around here, if we do manage to close above this previous support turned into resistance, then that will give the outlook of the next couple of days a lot better for the DAX. Bit of an indecisive day yesterday from the Dow. Posted really a doji, and we're engulfing it already this morning, so that's a positive start. Managed to get down to 33,375 before buyers came in, and we can see the positive spin, which is pushing prices higher this morning. Looking at the 4-hour chart, we've got this previous support line 33,290, which we stalled in front of, posted this nice hammer type candle, and really need to clear 34,100 to and close above there on a 4-hour basis to turn this market around. The Nasdaq performed a bit better than the Dow yesterday. The tech stocks managed to sort of post gains, and we posted a positive day overall. We stalled at just below, actually just above the neckline of this head and shoulders formation. So a nice little level to confirm the downside potential. It's stalled in front of there and has reversed higher. So needs to get back above 14,100 to 14,160, close above there on the day, and it's completed a turnaround and further upside potential again there. However, if we do get a break and a close below the 13,600, we could be in trouble in the Nasdaq, because that will have confirmed the formation. Similar sort of thing in S&Ps. This neckline that we've drawn in, we've taken out this the spike lower, we've called it, and really focused on these two levels of support coming in at 4,270. We got below there, got down to 4,255 before buyers came in, and again really needs to take out 4,365, and that'll put a really nice positive spin with the morning doji style candle on it. I think I've covered everything, Joe.
Nice job, Steve, as always. So let's have a look at the gun to the head trades from yesterday. So Steve, you went short of Nasdaq. Obviously, I got cut off, so I didn't get a chance to do mine. But I did have it set up, and it was a short on sterling Swiss, which got stopped out. So I could have,
Okay.
I could have buried that one,
Yeah.
and no one would have known. But you know, we're honest chaps here, Steve. So
Yeah. Lovely.
That was my trade yesterday, and unfortunately, it was stopped out. So there's the confirmation there. It says no ticks, but that is incorrect. I don't know why. Oh, I do know why. That's not changed. There we go. Minus 23 ticks. So what are we going to look at today? I've got one ready.
Go on in.
If you don't mind. So we got our hands dirty this morning, Stephen, wrote some analysis, and I had a look at Aussie US dollar. And this was the setup, so it looks a bit messy. Let's just make that maybe an 8 hour to zoom it in a little bit. The reason being is we've got a nice sort of pullback here. I've drawn the Fibonacci lines on. We've got a 50% level, pretty much where the price action is right now, to be honest. And I've got this black line, which was kind of where I was thinking I want to be looking at fading this move. It is very close to maybe completing this double bottom pattern here. So we've got the bottom here, the bottom here. Therefore, the neckline of that would be at 73.14. So my stop loss is just a couple of ticks above that. And I'm going to try and fade into this move here at 72.65. It's currently at 72.62. So I'll take what's on the table now, sell it there. With that stop at 73.17, targeting a move down to 70.87, which is in line with this swing low here from the 14th of Feb. So that is
Nice.
my trade of the day.
Lovely. Nice one, mate.
What do you got, Steve?
Well, I'm taking a look at Nasdaq now. You know what I'm like. I'm always looking to sell this, but I think I've got to take on board this sort of like price action over the last 24 hours and how solid it's been. Now, this looks like it's set up a really nice head and shoulders, inverse head and shoulders formation. If we do get a break of 14,090 or even clearer break of 14,120, then I think there's good potential upside. The measured move target on such a formation, we take the head to the neckline and simply place it on there and wherever the breakout occurs. So the potential for this to reverse all the way back up to these higher levels. I'll sort of won't go and maybe as punchy as that on the actual target on a daily basis, but I will have a punchy one anyway. So I'm going for a 4-to-1 risk reward, buying the Nasdaq here. I'm going to place my stop just below these lows, which is quite aggressive from a trade perspective. 13,919, targeting 14,469, and getting long here at 14,029. Is it 14,029? Yeah, that's for me. I feel quite happy about that, but when I feel quite happy about some things, it always makes me question it.
Yeah, be comfortable being uncomfortable.
Yeah, exactly. So that's that's my trade idea with my gun to my head. As I say, prefer to wait till a break of that neckline, but we've got a gun to head, so we can't.
Yeah, I'm struggling to. For some reason, the spreadsheet won't let me enter a buy trade for you. I don't know. It's just not used to it.
I think it was hard coded in, Joe. It's
Yeah.
always a sell trade for Stevie boy. But yeah, going against the grain today.
Okay.
Could be
Nice.
careful. You're only 20% behind me, mate.
Yeah, that is true. Okay, data-wise today, there isn't a lot due out from what I can see. There are a couple of Bank of England speakers. We've got monetary policy hearings at 9:30, and we've got a Bank of England meeting, member Tenreo speaking at 5 p.m. today. So other than that, not a whole lot going on. So I guess markets will be continuing to keep an eye on the situation with Russia and Ukraine and what emerges from that. So as always, be careful, traders, if you are involved today. Anything else to add, Steve, or shall we
No,
wrap it up there?
all good to wrap up, mate.
Superb. Everybody have a fantastic day, and we'll be back tomorrow.